Hello, and welcome to the September Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. August was another very good month for financial markets. Here in the U.S., all three major indices were up, with both the NASDAQ and the S&P 500 both showing material gains. Developed markets also did well, and emerging markets bounced back after a difficult couple of months. It was a good month for stock markets around the world. Bonds, however, pulled back a bit on rising interest rates, and what drove these differing results was the continuing strength of the economy despite the rise of the Delta variant of COVID. August saw the virus continue its spread, with case growth up by over 90% on a 7-day basis. Despite that, however, there have been no large-scale shutdowns as states remained open around the country, and that's moderated the economic impact. Another helpful factor has been that the worst of the medical risks remain concentrated rather than widespread. So overall, despite the higher infection growth, the economic risks have remained contained throughout the month. Despite that, though, there are signs that rising medical risks are starting to appear in the data. Consumer confidence dropped significantly in August. Other economic data, while still positive, has in many cases underperformed expectations after months of substantial outperformance. The easy part of the recovery, both medical and economic, now looks like it may be behind us, and the economic risks are clearly higher now than they were at the end of June. Nonetheless, though, the recovery does look likely to continue. While infection growth is much too high, there are signs it may be peaking. While many areas are severely affected by the virus, many more are not. And while confidence and growth are pulling back, they're still at positive levels. On the economic side, there's still substantial momentum. And on the medical side, as we've seen in previous waves, we know what to do, and we're starting to do it. The key question going forward is whether this wave of infections will widen and start to generate shutdowns again. So far, it doesn't look like it, but that's what we need to watch. And if so, we'll need to watch whether the decline in confidence and momentum gets worse. Risks are higher than they were a month ago, but as we move into the fall, the bottom line is that despite the virus and despite the softening of some of the economic data, at the national level, conditions still remain reasonably positive. And as we bring the virus under control again, that should allow growth to accelerate. And that's what markets are seeing as they continue to hit new highs. Growth, but slower. Rising medical risks, but risks that are being contained. This is a slowdown in the recovery, but likely only a slowdown. And we should still see continued improvement throughout the fall. At least that's what the markets are telling us. That's it for this update. Thanks for watching. Join me in October for the next one, but until then, be sure to check out my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.